Are you thinking about buying a home in New York City? If so, it's important to take some time to prepare your finances and make sure everything is in order before you get too serious. In this video, we will discuss several important steps to take when it comes to preparing your finances for a home purchase in New York City. I'm Nick at Houseit, based here in New York City. Check out our website, houseit.com, to learn how to save money if you're buying or selling a co-op, condo, or townhouse here in the Big Apple. So let's get started. Get pre-approved. Getting pre-approved is the single most important step when it comes to preparing your finances for a home purchase. A bank issues a pre-approval letter after they've reviewed your credit, assets, and income and determined that you're a strong candidate for receiving a loan. Having a pre-approval letter is a requirement for submitting offers in New York City. But even if you're not yet ready to start viewing homes and submitting offers, having a conversation with a lender as a first step is highly recommended. This is because a mortgage professional can give you a realistic sense of your budget, factoring in your income, assets, as well as other considerations like buyer closing costs, which unfortunately in New York City are the highest in the country. Please be sure to check out Houseit's free and interactive buyer closing cost calculator, which is available at houseit.com. This calculator gives you an itemized breakdown of all buyer closing costs so you can better understand the big picture when it comes to the costs of buying a home in New York City. The link is below in the description. Speaking with a mortgage professional is particularly important if you're self-employed, if you've just changed jobs, or if there has been a large increase or decrease in your income compared to last year. If you're serious about buying within the next few months and plan on starting your search right away, we recommend obtaining a pre-approval letter immediately. Desirable homes in New York City sell quickly, and if there's competition from other buyers, you will lose out on that dream home if you're stuck waiting days for a pre-approval letter. Learn about co-op financial requirements. Co-ops in New York City have specific buyer financial requirements. These include a maximum debt-to-income ratio, minimum post-closing liquidity, and a minimum percentage down. These requirements are almost always stricter than what a lender might ask for. In the case of the debt-to-income ratio, most lenders will underwrite up to 43%, but a typical co-op in New York City might not allow anything above 25% or 30%. If you're considering a co-op, it's important to understand these financial requirements when it comes to your overall budget. Address debt-to-income ratio deficiencies. If your debt-to-income ratio is borderline but you have ample assets, it might make sense to pay down certain debts in advance of buying a home. Let's say your debt-to-income ratio is 31%, but you have a $500 a month car lease with 6 months remaining. Now, if you early terminate the lease, your debt-to-income ratio drops from 31 to 28%. This could make all the difference when it comes to being approved or rejected by a co-op board in New York City. Similarly, we recommend paying off any insignificant balances which are harming your debt-to-income ratio and cluttering your credit report. If you're carrying a small balance on a credit card or have a few $1,000s left on your student loans, the best thing to do is to pay these off early. We recommend doing this at least several months before you buy a home in order to give time for your credit report to reflect the paydowns. Understand gifting. Many co-op buyers discover that their finances are insufficient for board approval. Let's say you have a high-paying job and can afford the 20% down payment and closing costs, but you only have 12 months in post-closing liquidity as opposed to the 24 months required by the board. What do? Well, the most common solution is to receive a gift from a family member. Now, most co-ops permit gifting, but there are a handful of co-ops which don't allow gifting or cap the size of the gift one may receive. The good news is that there's an easy workaround for this, but it does require several months of planning. Essentially, you'll want to receive the gift at least 3 months before you submit the purchase application. Why 3 months? Well, most co-ops require the most recent 3 months of bank statements, and a co-op has no way of seeing any of your bank activity prior to the earliest statement period they request. So if you request the gift early enough, it's technically no longer a gift, but rather just part of your assets, at least in the eyes of the co-op board. Simplify accounts. You'll make your life much easier if you try and consolidate bank and brokerage accounts several months before you decide to buy a home. We get it, you might have signed up for way too many bank and brokerage accounts over the years. Maybe one has a high interest rate, the other account has free ATM withdrawals, perhaps worldwide, and the brokerage accounts gave you sign-up bonuses. But just remember, more accounts means more paperwork and a bigger paper trail. When the lender asks you to submit the last 3 months of bank statements for all accounts, you've just created extra work for yourself. Having loads of accounts also bloats the size of the board application, making it more time-intensive while also increasing the likelihood of mistakes. Moreover, in the case of a co-op, having a simple financial statement with very few accounts makes it easier for the co-op board to understand your financials. And making things more straightforward for the board makes it more likely that they'll approve you. So there you have it. We hope you enjoyed this video, and if you did, please like, subscribe, and leave us a comment. We'd greatly appreciate it. I'm Nick at Houseit, based here in New York City, and we'll see you on the next video.